FXN Mentoring. What's up, guys? Welcome back to Trading with Market Makers, and welcome back to week 7. So, new week. As we go into week 7, let's go ahead and jump right into some things to keep in mind about the previous week. So, last week we covered trading plans. And so here's a couple key features to keep in mind. The first one is to keep the plan simple, right? You want to keep the trading plan simple, as I showed you guys in the previous video. Things that can keep the trading plan simple is very simply think about the process. Think about the process that you're going through when you're looking at charts and you're trying to determine what pairs you're going to trade for that day. That process should be simple as identifying what pairs are tradable to begin with, meaning what pairs that you find are you able to identify, let's say, the peak formation highs or lows from the quickest, right? Once you identify the peak formation lows or highs, then you have to determine, okay, if I'm going to be a buyer or if I'm going to be a seller, what are the possible setups that I could see price giving me based on what price action is right now? Is it possible for a type 3, 2, 1, 4, whatever the case may be? Remember that your plans should also have your entry and exit strategies in them, right? You should know your entry, you should know your exit. You should know how you're going to enter each trade, specifically how you're going to enter every type 3, type 1, type 2, type 4 pattern. You should also know how you're going to exit them as well. This should all be on your plan. Keep in mind that the point of the trading plan is to make trading less emotional and more black and white. That's why I highly recommended last week to create your trading plan more as a checklist type of, criteria, or maybe as a questions based. Because essentially all you're doing is you're literally just going down the list, and as long as everything matches, boom, you can take the trade. If it doesn't match, you don't take the trade, right? So it takes out the emotion of trading. And it just makes it very simple: yes, no, yes, no. Think of your trading plan as basically trying to make you as a trading robot, right? When you think about trading robots, the trading robots, they don't care about emotion, they don't care about anything. The only thing that they care about is the rules, right, that you place on them as a programmer, right? You tell the robot, I'm looking for this, this, and this, and this. And that's all the robot is looking for. They don't care about anything else. I want you to think like a robot. I want your trading to be literally like robots. Because you're not going to have any emotions. You're going to be straight focused on what you're looking for. And it's either there or it's not. Your plan should be back tested first before trading live, right? So you made the plan, now you should go back test it first before you start trading it live, always. And also, once you back test it, really you should demo trade it first before anything. Don't just jump live. Demo trade it first, make sure that you feel comfortable with it. The trading plans that you create, that you backtest, should be profitable after 100 trades. Meaning, like, after you take 100 trades with that trading plan, you should be in profit. Right? If you're not in profit after you take 100 trades, then there's something wrong. There's some adjustments that need to be made to the trading plan. All right? So, what are we going to talk about this week? In week 7, we're going to go ahead and we're going to talk about backtesting. So we've created the plan. We've gone through the week to create a trading plan. Now we have to backtest that plan. How good is that plan? Will that plan work, or will it need to be adjusted? Well, that's what backtesting does. I can guarantee you that this is a part that nobody wants to do. Like, meaning nobody outside, in the retail world wants to backtest. They just want to trade. They don't understand the process of becoming profitable in trading for real, or consistent in trading for real. All right, so this is what we're going to do this week. So let's talk about the backtesting. So you might ask yourself, why backtest, right? Why are you backtesting? Well, the first thing is you backtest because you're learning how the patterns and timings come together. When you're replaying the charts one bar at a time, you're seeing this, you're training your brain on how these patterns come together with the right timing. It builds your confidence in yourself and in your trading. So think about the fact that when you're replaying the charts and you have your directional bias and you're trying to figure out, okay, is this going to be a type 3 or whatever the case may be, you're thinking about all the different things that you've learned for 6 weeks. And you're putting it together, essentially, is what you're doing. And you're telling your brain, hey, brain, this is literally how the patterns are created. Here we go. Here's all the confirmations. You can take the trade. It helps your brain see the patterns as they are happening, right? When you replay the charts and you're replaying them, your brain is seeing how these patterns are happening in real time. I think most importantly, it helps build your understanding of market makers' behaviors. So it helps build the understanding of what market maker behaviors are. You see me every Sunday when I talk about behaviors, market maker behaviors. The behaviors are all the same always. They really don't change. But when you see them, that's when you get the clue. That's what gives you the clues as to what's happening. Most importantly, it gives you time to think about what's happening when you're backtesting. Think about it. When you're backtesting, you have plenty of time to think. Because you can stop, you could replay, you could fast forward. Right? So time is on your side on this. And this is the best time when you can actually start thinking about what's happening. And that's hugely important. Because when you're in a live market, you have 15 minutes, right? About 15 minutes to think about what's really happening. But when you're backtesting, you could think a lot more longer than that. And lastly, the data that you collect is pure gold. The data that you collect on these pairs when you're backtesting is absolutely like gold. Nobody else has this information but you. This is the information that you collect off your backtesting is the information that everybody wants me to give them for free on YouTube. Because they're too lazy to freaking do it themselves. Right? So you're going to have that collection of data for yourself. You're going to get to know these pairs extremely well. And that's the whole point. Because when you're backtesting, you get to know the behaviors of not only market makers, but the behaviors of the actual pairs themselves. Each pair has its own behaviors that you're going to notice. And it's going to repeat over and over and over again. Also, you're going to get to find out what pairs you like, if you haven't found out yet, what pairs you like versus what pairs, suck for you specifically. And that's hugely important because you need to find out what pairs work for you and your style versus what pairs don't work for you. There's no point in you trading a pair that you suck at because you just don't understand how it moves and how it behaves. So let me show you how you're going to go backtest. All right. All right, guys. So what we're going to do in order to backtest, we need to essentially be able to collect data, right? So what we're going to do is we're going to collect data using the journal that's on the website. So if you haven't done so already, make sure that you go download the journal off the website. When you open the journal, essentially it's going to look just like this. Now to essentially see how this is going to be filled out, on the very top or on the bottom, depending on how whatever software you're using to view this, you're going to see where it says EuroCAD example April. If you click on that, it's basically an example of how you're going to fill this out. You have the month, the day, the actual date, the session, the trading session, the level. So essentially, most of the time you're going to be using just peak formation, low, high, reset, something of that nature. The entry hour, this is by the actual hour. So this is like 10:45 in the morning. Stop hunt candle hour, stop hunt candle minute. This is basically what candle are you using for your stop hunts. The trade short or long. The entry, second leg, M, W, star pattern, or whatever you want, whatever the option that's best suits you for. As far as the entry structure, I mean, we're going to keep this very simple. The only things that you're going to basically use is, Asian high, low, middle, and monthly high, low, weekly high, low, previous day, and the EMAs. So a good example of using this would be, let's say, if I'm trading, a New York session and I'm coming off of peak formation high, so I'm actually looking for sells, let's say. So it'll be a short, and then let's say this turns out to be like a continuation trade or something like that. You can put whatever railroad tracks, if that it's the actual entry there for the continuation trade in the U.S. session, and then for the structure. What you'll typically do, let's say for type threes, during the U.S. session, typically we're looking at Asian range middle or Asian range low, depending on where it's pinning to. But then we'll go ahead and take a look at the sentiment. Sentiment direction is basically that 50 line, or I'm sorry, the yellow line on the TDI. Is it level up or is it down? Is it level? So meaning is it going, is it straight level? Going side to side, or is it in an uptrend, downtrend? The sentiment location is basically is it above or below the 50 line on the TDI? Divergence, is there true divergence? Yes or no? False or true? Stop loss or stop is your stop is basically how many pips is your stop loss. Take profit obviously is how many pips take profit are you using. So in this case, we'll do 30, and then stop loss, we'll do 15, let's just say. Take profit structure, you can, basically you're going to be using same thing, previous days, high, low, weekly low. I mean, pivot points is really support and resistance, so you're not going to worry about this. I just had pretty much every option included in there, just in case in the future you want to use pivot points or whatever the case may be. But you're mostly going to be using these previous highs, days and lows and stuff like that. 800 EMA, let's say we're going to the 800 EMA to take profit. Did you win? Did you lose? And then if you actually look at the template, which is what you're going to be using, there's going to be a reason for exit. So if you exit the trade early or anything like that, you can just type in what the exit reason is. And then there's going to be basically two spots for screenshots. So for a screenshot of the entry and a screenshot of the exit. So that way you know what it looked like before and what it looked like afterwards. Okay? So this is a journal that you're going to use for collecting the data that you need while you're backtesting. So the first thing that you're going to do with this journal is once you open it and you go to template, For me, it gives me this option. Again, it may be different depending on what software you're using to open it, but you can click here and select duplicate, and that's what it'll make a duplicate copy of it, and then you can rename it to whatever you want to. So let's say that I'm going to be doing a back testing on USD CAD or USD Swiss. So I'm just going to name it USD Swiss 2021. Okay, so there you go. So there's my template there, and then I can go here and go ahead and change it to January, because we're going to start from January. Okay, and then obviously the date's going to be, first, second, whatever you start out with in January for the week. Okay, and then we'll start filling this out. So that's what we're going to do for the journal part of it. Okay, let's go over to the charts now, so I can literally show you how you're going to backtest and stuff. All right, so I have this split up 50-50. You could do it, however you want to. You could do it full screen. It doesn't matter, whatever fits your comfort level. I'm just doing it so you can see both ends of it. So we're going to do USD Swiss, okay? So the first thing we're going to do is we're going to go to the hour chart, and this is what I'm doing right now. What I want you to do is, your own pairs. But here's the important part, guys, okay, is I need you guys to erase everything that's there, okay? So meaning like I know you guys have been like tagging all these different pairs and stuff with setups and all that stuff. So I don't know if you guys want to do a pair that you've never done before or that you haven't touched before, or if you do want to do a pair that you're familiar with, that's fine. But I think it's the benefit for you obviously is to study and understand how everything is going to flow essentially when you're back testing. So I picked a brand new pair, okay, and all I did was I essentially just created, the peak formations, resets, and all that stuff, right? So I did this in advance, and I went all the way back to January 1st, okay? That way I can show you what you're going to be doing. So you're going to go back from January in this case, okay? And once you've done this, and you know how to do this because we did this in week 1, 2, and 3, all right, from very scratch and start from the current price action, start figuring out what's the peak, high, low, resets, and work your way back all the way back to January, just like we did at the very beginning when we were doing week 1s and 2s, when we did the peak formations and stuff like that and market maker cycle. All right, once you do that and you're at this point where everything's all the boxes are marked out. You don't even have to put names on it or anything. You're just literally marking the boxes, okay? Just so you know what they are. You're going to go ahead and you're going to do this. You're going to scrunch on the side here. On the side here, you're going to scrunch the price action all the way down so you can't see what's going on. And you're just going to go back to January 1st, right here, 2021, okay? And then what you're going to do is you're going to go into replay mode. Okay, and then you can open it up once you're in replay mode. Okay, so now that you have it open in replay mode, all you're going to do essentially is go down to the 15-minute chart. There we go. And then turn on all the indicators. This is literally starting out like January 1st, right? So we know based on how we marked it here that this is essentially going to be a peak formation low, right? So let's just fast forward through this real quick, through this entire week. We'll start after the peak formation has been formed so we know our directional bias essentially. All right, so we're going to start a fresh week, right, of collecting data. Okay, we're going to start, this is going to be the 10th. So on the date here, I have 10th. I'll put the date of the 10th where we're starting at. The day is going to be a Monday. Okay, and then let's start this out and let's see what we end up getting as far as the trade setup, if there's any trade setups on Monday. So let's fast forward this. So remember that we're coming off a peak formation low, so we're looking at um, for buys only, right? So here's we're coming off a peak formation low, and let's see if we get any kind of setups here on a Monday. So all I'm going to do is I'm going to do this one candle at a time, so just go by a lot faster. All right, so what I'm thinking is here is I'm thinking this is the first leg here, comes up. This could be definitely a second leg here for a type 2. Now, the question becomes, I know we got two dojis here. This may start out to be, or this may end up being a star pattern here, right? We just need obviously one big candle to go up or whatnot. Like, no, that's not it. That's another doji. So 3 dojis. There you go. There's your candle right there. So there's your star pattern. Okay. So you basically have 1, 2, 3, 4, 5 candles, 6, 7, 8. 8 candles between the first and second leg, which is good. You have your TDI is also making a W as well. Okay, and you just had the crossover here, the green and of the green line crossing the red. There's also the green line is outside of the Bollinger Bands as well, so that's good. All right, so we have a pattern that's in the right timing. So what's the setup here is a type 2, and let's say it's in the London session. Obviously, we would need a pullback, so this candle's pretty big. Yeah, so ideally we would want a pullback. So if the next candle gives us a pullback here, let's do 2 to 1 real quick. That's a 2 to 1. Let's see what the next candle does. Yeah. So there's your pullback. That would be entry here. There's stop loss goes right here, right below the low. So 10 pips. And we can even now lower the risk 2 to 1. All right, so let's start taking this information now and start filling out, the data stuff. So this was at 415 is the entry. Stop hunt also same time 415. The trade here is a long entry is a second like W. Entry structure. Let me see here. We could do the EMA 50 because we're pinning to the 50. The sentiment direction, that's the yellow line on the TDI, I'm going to say is up. The location is above the 50. It's above the 50 line here. Divergence, no, we don't get divergence. Stop is about 10 pips, and take profit is 21 or so. So we'll put 20. So 2 to 1. Take profit structure is what? Well, if we go back, you don't have any kind of real structure here. So if I don't have any kind of option, I'll just leave it empty, which is fine. All right. And so then what I'll do here is this is the trade setup here. I'll go ahead and take a screenshot or a link, get a link of it. Boom, there's the link. And then I'll go ahead and paste the link there so I know what that is. And then we'll go ahead and let's play this out. Let's see if we win or lose. Okay, so we ended up winning that one. That's great. So we win. Exit reason, take profit was hit. TP was hit. There's our exit reason. And boom, that's it. So now I'm going to go ahead and take another screenshot of the exit. So like that. And I'm going to go over here, paste that, and there you go. There's the first one that we just did. Okay. So now let's go ahead and fast forward. So this is on Tuesday. And again, we're looking for buys. We're looking for buys. Um, so I'm thinking this could be a setup here. This could be the first leg here. This could be the second leg. This would be more like a type two because we didn't clearly break away from the bottom of the range. So to me, this would be more like a type two trade. Um, the question would be, what's the setup? Type two, first, second leg. That would be our bias. Our TDI is hanging out down here in the middle. We do get kind of a pattern here, so not the best though. Railroad track does give us a railroad track. What is going to be essentially our risk to reward ratio on this? About 8 pips or so. And for 2 to 1, I mean, essentially the top of the range is where we'd have to go. Now, it'd be great if we get a pullback. So let's do this here. So this is what, the 11th. This is on a Tuesday. This happens to be London. Level is peak formation low because we're coming off the peak formation low. Let me see the next candle real quick. So you get a little pullback. So the entry candle is 7 o'clock. Now, personally, like that's like crazy late. Me personally, I would not take this trade, but I want to see if it works out anyway. So let's just put this down here. 7 o'clock. The stop hunt candle is also going to be 7 o'clock. Actually, no. The stop hunt candle is stop hunt candle. The stop hunt candle is here. I'm sorry. Is 4:15. I don't know what the hell I was thinking before. I think I read that wrong. Yeah, so I'm sorry. I read this completely wrong. Stop hunt. I thought it said stop loss. Stop hunt candle is basically this candle is whatever candle is the one that does the stop hunting, right? So like this candle here or this candle here, either one that you want to put on here. But I would say because this is a second leg W, um, you could put either the first or the second leg of the stop hunt candle. So I just put the first one in here that's happened to be at 4:15. I apologize. I thought this was it said stop loss, but it didn't. All right, so going long again. Entry type is the same thing. Second leg W. Structure, we really don't have a structure. Let's see. Yeah, we really don't have a structure. So, actually, no, Asian low, Asian range low. The sentiment on this is actually sentiment is down, is going down. Like the point of it is going down, um, and it's right at the 50. I want to say it's above the 50 right now. Divergence is false because we don't have any. Stop loss is 8 pips. Take profit is 18. We'll just put 20 here. Take profit structure is going to be the Asian high. And then, yeah, let's take a photo of it real quick. Get the link. And then we'll copy the link. All right, and then let's go ahead and play this out. And let's see what happens. All right, so right here we get stopped out on that candle. So this is a loss. So on this one, the reason that I would put here is stopped out. Stopped out due to continued stop hunting is what I would put. Basically, they came back down. This wasn't really the second leg because they came back down again and then hit it one more time. So that's what I would put on there for that one. Um, and then what we'll do is we can go ahead and take another photo of what that looks like. Boom. And there you go. So that's your second entry there. Okay. And literally you just keep going. All right. So this is what, Tuesday? No, Wednesday. Wednesday. So coming up on Wednesday now. All right. I mean, the first thing you notice is you can see the TDI is all the way at the bottom here. So that's a good thing. We're still looking for buys. So that's a good thing. Oh, look at that. All right. So when I look at this, I'm looking at the 800 pinning here. This is acting as rolling support. You have a stop hunt here. This is actually the stop hunt candle. To me, this looks like a type 2. This actually looks like a trade out of the edge, is what it looks like. The problem for me, obviously, is this big ass candle, right? It's pretty freaking big. So unless that candle has a pullback or 15 pips or so on this, because this pair doesn't have crazy moves or anything like that. So unless I can get that out of this, this may be a trade that I may skip. So I'm looking essentially for a pullback because we already have divergence as well in the TDI. So we have divergence. We have the first leg, second leg here, pinning to the 800. That's all good, but we would need a pullback. We do get a pullback. So that pullback would be our entry here. And yeah, I mean, 13 pips. So here, let's do this then. Let's record this. Then 12th. This is on a Wednesday. Again, London session. Same thing, coming off peak formation low. The entry hour on this one would be 3 o'clock. So 3 The stop hunt hour would basically be this candle here. So that's 230. So 230. Again, we're going long. Entry type is second leg W pattern. Um, the entry structure is going to be the Asian range low because it's a type 2. Sentiment here is going to be up because the yellow line is pointing up on the TDI, and it's below the 50. Divergence, we actually have divergence, so we change this to true. And then the stop is about 13, 14 pips. So we don't have 13, we'll just make it 15. And then as far as the actual take profit, it's going to be 2 to 1. So we're going to go ahead and do 30 on that. Take profit is going to be structure, which is the previous week's high. We don't have that, so we'll do weekly high. And we don't know. So we'll take a photo of this here. Put it there. And then let it play out. And let's see what happens. All right, so take profit was pretty much hit right here at the very top there. So that's good. So we'll take a picture of this, copy it there. This would be a win. And I would just copy and paste this. Take profit got hit. Boom. And there's your third entry. All right, guys. So we did Wednesday here. So we got 3 trades so far back tested or data collected essentially. Let's go ahead and let's move on to the next day, Thursday here. All right, and so same thing. I mean, essentially, I'm still looking for buys, right? Because I'm still coming off of a peak formation low. So still looking for buys. That hasn't changed yet. So let me open this up here. Let's see what we end up getting here. Okay. Let me slow it down even more. All right, well, I'm looking at this here as a possible maybe first leg. Then coming back down for a second leg. 1, 2, 3, 4, 5. I don't know. Wait a second. This is 345. It would be a trade. Yeah. Damn. All right. This is probably too late, anyways. But this looks like a trade where first leg is here, second leg is here. Actually, let's see. Yep. That's what it was. Damn. And this was right at 4:30 or so. So yeah. So I mean, yeah, if you would have caught this or paid attention to it, This could have been a trade out of the edge as well, but I didn't put the two together, unfortunately. Damn, that would have been a really good trade. All right, whatever, no trade. So I just keep going, and I'm not really interested at all. All right, so Friday now. Again, still looking for buys. Nothing's changed on that. Well, this could be a type 2, right? This could be a type 2 here. First leg gives you a railroad track. You got 5 candles between the first and now second leg. Second leg also gives you a railroad track. You don't have divergence, you just have the pattern here, looks like, that you're coming up on. So let's see if this would be a trade like that. We don't have the EMAs, so really we go to structure first, which is right there. Now, because this is only a 5 pip stop loss, so it's super tight. This is, what day is this? This is 15th. So let's start marking this on our thing here. 15th. This is on a Friday. London. Still coming off a peak formation low. So the entry hour could be one of two different things here. You could enter right after the railroad track, or you could wait for a pullback. So I mean, it really depends. So 415. Let's say what happens on the next candle here. Yeah, so 415 would be the entry here. 430 actually. This 430 candle. So entry hour would be 430. Stop hunt hour. So stop hunt hour would be basically this candle here. That stop hunt sets right at 4 o'clock. And again, we're going along. Same thing, second leg, W. Asian low is the structure because it's a type 2. Sentiment. I'm going to say this is more like a level because it's really just going straight sideways and then it's above the 50. No, we don't have divergence, so that's false. Pip was 5 pips. Take profit on this is actually smaller. It's like 15, but we'll put 20. Take profit, we're using the Asian high, essentially. And let's take a quick screenshot of this. Get the link. And then just copy it over here for the entry. Boom. All right, let's play this out and let's see what happens. Damn, he had a nice pullback. Oh no. All right, you get taken out on that one. That sucks. All right, so this would be a loss. So that'd be a loss. All right. We'll copy this and just paste it here. And then what we'll do is we'll take another photo. Boom. And we'll paste it here. So there we go. All right. So let's continue to play this out since that's a loss. Well, the interesting thing that I see here, or that I notice, is that all they're doing is they're basically retesting. If you look to the left, they're retesting this over and over and over and over again. See the spikes? So I'm thinking this may not be over already, but it's too late to enter anyways. So let's just get through this. Boom. No. Could this be a multi-session? Boom. Yep. There's your railroad track. But of course, what's the problem? It's probably too big. Damn. So this is a multi-session. So let's do this. What is... I'm going to do this. 11. I mean, this is not bad. 11 pips. Where could I go to make it 2 to 1? Okay, I'd just go to yesterday's, basically yesterday's high, or close to yesterday's high up here. All right, so what I'm going to do then is I'm going to file in or journal in another trade on the 15th. Friday. This time though it's in the US session, New York. Same thing off of peak formation low. The entry arrow on this one, let's see what the next candle is. No. So the entry is going to be right at 9 o'clock. Stop hunt hour, it's going to be this candle here. So it's 8:30. Again, we're going long. And same thing, second leg W pattern, because we literally are. We took it way too early here. Our timing was just off. This is actually the first leg. That's the second leg. This is same thing. This is actually still the same thing, Asian low, because there's still a type 2. It's just a multi-session type 2 that we're looking at now. And you can see the sentiment now is actually down on the yellow. On the yellow here is pointed down more. So we'll put this one down. And then it's actually below the 50 now. Any divergence? No, there's no divergence. The stop hunt here is, or stop loss, I should say, is about 11 pips. So just put 10, and then we're going for 23. We can just put 20 here. And what we could do here is we could do previous day's high. And let's grab a quick link. There's the link. And that's going to be for the entry. All right, and then let's play this out and let's see how it goes out. There we go. Boom. Yep. There it is. Boom. All right, cool. So we won that one. So we're just going to hit take profit was hit. Boom. And then we'll go ahead and take another screenshot. And then go ahead and paste it over here. Boom. And there you go. So there you go. We just back tested a week on this particular pair, right? And we ended up getting 3 wins, 2 losses. Since we're doing a 2-to-1 risk reward ratio, I mean, we came out pretty good. We came out pretty good on this. Because we ended up getting 20 plus 30, that's 50, plus another 20, that's 70. And we ended up only losing 5 and 8. So, what's that, 12? 13? So, not bad for 1 week, right? So, this is how you backtest. And then you just literally keep going. You're just going to keep going. New week starts. Go ahead and play it out for the week. Slow it down, stop. You're still looking for buys, and you just keep going. Keep marking it down. When you get to, you can see you have plenty of room on the chart here for about 128 trades. So if you need to make it longer, obviously you can, I don't know how to work this correctly, but I know you can extend this out to go further down than 128 cells. So you could do that also. And then if you get to a new month, let's say when you get to like February, you could just click on the cell here and then literally put in February. You can just do that, and then same thing, date, and then start over again. That makes sense. Okay, but this is essentially how you backtest. For me, what made me who I am today is doing this, is backtesting. Okay, it took a lot of time, it took a lot of hours, but what I found successful for me was I wasn't focused on trading at this particular time, right? When I was doing this, the only thing I cared about was getting the information, getting the data, proving that my trading plan that I had written out would actually work and would provide me with a profitable strategy that would, over an extended period of time, would be profitable, meaning basically 100 trades, right? So that's what I was focused in on. I wasn't focused in on looking at the charts or anything like that. And so one of the things that I think I found that was very that I realized is the fact that if I'm worried about backtesting and making sure that I get my strategy correct and making sure that it's profitable and all that stuff, like I'm not paying attention to what's going on during London session or New York session like in real time. You know what I mean? Because that really doesn't matter to me right now. The only thing that matters to me is getting this done, backtesting, grabbing the data, taking a look at my strategy. How can I make it better? What happened with the losses? What did I do wrong with the losses? What did I do correct with the wins? Things of that nature. That's what mattered to me. So I didn't have to be up at 4 o'clock in the morning for London. So it was never the point of me having to be up at 4 o'clock in the morning. That only happened, me being up at 4 o'clock in the morning to actually trade was when I was ready to start demo trading and putting it out on a demo account and then eventually a live account, right? But all you're doing, this is literally how you backtest, guys. You just keep going with this, okay? So start from January, and it doesn't have to be January 1st, right? It could be January the 1st or second week of January, wherever you could start. That shows you like a peak formation, basically. You want to start from a peak formation, right? So that way you have a directional bias, okay? And then you essentially go from there. Start filling this out, okay? And do as much as you can of it. All right, we're going to start to really test out your trading plan, your strategy that you have written down for type 1s, 2s, 3s, 4s, and all that stuff. And we're going to see how accurate it is, what we need to adjust. Don't worry about the results, just worry about getting the data. Once you get the data, then we can look through the results and figure out what happened. We can fix the mistakes, right? But it's very important that you record each trade that you put in here. Okay? Each trade is super important that you put in, because this is how we're going to be able to help you. All right? So, let's talk about homework. So, what I want you to do for homework is basically take the trading plan that you created and go back test it. Okay? Start from January 2021 and go all the way through present time. So do at least, this we're 10 months. So try to do at least the 10 months. Okay, I know it's time consuming and everything like that. I understand. But try to do this week, try to do as much as you can from that. I'm not saying that you're going to get through all 10 months or anything like that. I'm just, saying try to do as much of it as possible. Okay, because a lot of what we're going to do moving forward, a lot of the homework is going to be back testing for the rest of the program itself. Okay, we'll cover other topics and stuff like that, but a lot of the homework that you're going to have moving forward is going to be back testing, continuing to grab data. All right, so start from January 2021, and you're going all the way to present time. You're going to use your trading journal to record the trades, obviously. Okay, and I walked you through a whole week of me doing it, and I want you to just literally copy exactly what I just did. Okay, do the exact same thing. All right, and the goal here is that you should be able to, from January 2021 to present, you should be able to find 100 trades. I believe so. We'll see, depending on the pair that you pick, right? And also just dependent on your trading plan as well. All right, but that's what I want you to do for homework. This week there is no test. Again, I want you guys to focus in on this stuff. Okay, we're now at the stage of where we're focusing in on putting it together, putting it into use every single day, every single week. Okay, if for any reason you haven't turned in any homework from the previous 5 or 6 weeks, or any test from the previous 6 weeks that you still have not turned in, these next couple of weeks are the weeks where you need to make sure that you turn that in. Okay? So if you're behind on any homework or any test, this is where you start to make it up. Okay? So make sure that you get those turned in, so I can get you feedback on, so you can be that much better. Because the feedback, I promise you, makes the difference. All right. So guys, I hope you enjoyed this week's video on backtesting, and we will see you in the Sunday session. Have a good one.